What's up, guys? So it's been a busy last like 6 weeks. I haven't had a chance to really make a video. So the first one back, I wanted to talk about something that's been brewing, possibly right now for the last 3 weeks, maybe the last month, and that's Evergrande, which is a Chinese company, but it's also the largest real estate company in the world. And this video will talk about kind of the situation that they're in, how it could affect global markets, or how this could all possibly just blow over and it's just another little speed bump, you know, on the track of stocks just continue to go up, so we don't know. And also if it will impact, US housing, down here. So without further ado, let's get into it. So Evergrande is it's a fairly large company. It controls 2% of all the China's real estate market. So it's pretty vast, right? Anyone that owns 2% of like a giant like that, obviously anything bad that happens or good that's going to get reported. Now, pretty much they're $100 billion, in the hole. They have a market cap of like 200 billion, so that means they're worth around $200 billion, but they have debt of over like 300 billion, right? And that $100 billion is just in real estate. People are talking about a possible collapse. The CCP came out recently and said, hey, listen, they're not going to make their payments, deal with it, right? Coming up in this next week of September. And people are comparing it to Lehman Brothers. I just want to point out that Lehman Brothers at the time, and this was probably around 12 years ago, maybe 13 years ago, Lehman Brothers was worth over 600 billion, and they did a lot more than just real estate, but it was real estate that was the dagger that bought them down. And if you know a lot about history, it's only a decade ago, but after Lehman Brothers fell, obviously, Bear Stearns went after, then WAMU and then Countrywide, and we had all this and to me, before we get any deeper into this story, that's the alarm, right? It's like, well, if this person is doing that bad, then what is everybody else in that sector doing? And then how could that cause a domino effect and bleed back into, how me and you are living our daily lives, right? But before we go that, let's get into it. So I just wrote some notes. So let's see if I could decipher this, because I probably should have made the video when I made the damn notes, but didn't have time. China came out and told bond holders that they aren't paying their interest payments. So China came out and pretty much saved them. And who are the holders of the bonds and how does it all relate? So just to kind of catch you up if you're not familiar with all that. Essentially, people like me and you, regular people, we want to go start a business, we want to go do something, we got to go to a bank, right? The bank's going to say, let's say you want to open a shopping store, a shoe store or something, and let's say it's $1 million for, to build the building and inventory and all that. The bank will say, hey, put down 20%. So we put up 200,000, we take a loan out for 800,000, we're paying them. Corporations, they have corporate bonds. And essentially what they say is, hey, we need money. We're going to go do, whatever the hell it is we're going to do, right? And you have private investors that buy those bonds, right? And they get paid, every month or every 3 months or once a year, depending on whatever's negotiated. And the corporation pays them back, and then the bonds get, retired out. And it gets a lot more complicated. They could be convertible or whatever. We're going to keep it simple. It's basically private investors giving loans to publicly traded companies. And so Evergrande, how they were able to expand was raising a lot of debt. And the type of people that like bonds, just like back in 2007, pension funds, and also regular private funds that are planning, mine and yours, like, regular 401k retirement, there's a lot of money that gets slushed around that buys these assets because they give, you give the person 100 grand, they're guaranteeing you 6%. And you're like, oh, wow, this is a really big, great company, right? It's like Apple, like Apple, if they say, hey, let us borrow $1 million and they're going to pay you 2%, well, you're getting less of a percentage because, Apple's good for it. And, these bonds get tiered. So, AAA is like obviously the best, and it goes all the way down to like D, which is like junk bonds. And these bonds now, according to the Standards and Poor's, the S&P 500 rating system, they've officially been lowered to a junk bond. So I just hope that kind of helps. Sorry if I wasted 2 minutes of your life, but let's go deeper. And that's if you didn't know bonds, so you're able to follow the story. So the problem is that real estate is not liquid, and it needs time to sell. So basically, they're coming into a time crunch, right? These bondholders are like, "Yo, it's first of the month. Where the hell's my money?" And they're like, "Shit, we don't have money, right?" And if you're a business, like, if you were just in stocks, or if it was Apple, where you could just sell more product or just lower the iPhone to 50% just to raise the cash, you don't care, you could do things like that. But when you're just a real estate company like they are, you can't just go sell real estate right away. I don't know if you've purchased a home, you have a friend or a family member that's purchased or sold a home. It usually takes, at least here in America, typically 45 days, sometimes 60 days. You put the thing up for sale, someone buys it or says, "Hey, I'll buy it," then they got to come up with financing, or they pay cash. That's the quickest way, but nobody's going to have, hundreds of millions of dollars in cash. Usually they're going to get financing. You got to get the damn inspections, so a part of that problem is the fact that everybody knows that they need money now, right? It's putting downward pressure. So they might have, like, let's say 100-unit complex in China, and they're like, "Fuck, okay, you know what? Let's just sell this off. Let's just sell it for 100 million because that's what it's worth." But all the other investors know that they need our money, right? They need to sell this fast because they got to come up with cash. So you're not going to want to pay market value. You're going to want a discount. That's just business, I've always said this: all business people are sharks. We're all sharks, right? We see blood in the water, we just freaking attack, and that's just the nature of it. Because if you don't, someone else will. When it comes to competitiveness like that, because you're like, well, why am I going to put 100 million up? We're not going to buy this building that's 100 million and not have to deal with the headlines and all the negativity and all that, right? And plus, you need the money, you need it fast, you need it right now. You're going to have to give it to me at a discount. So that's also putting Evergrande at a huge disadvantage, because they're not even being able to get what the hell their property's worth. They're having to sell it for less just to come up with the payments. Well, you can only prolong that for so long before the payments mount up and you can't move any assets. Because even if you fire sold all your assets, still you have 200 billion in assets. They owe 300 billion. They're $100 billion short. Sure, with real estate over time, it would come back. You know what I mean? And they would build it out, sell it for a premium. Some of them they were hold will come up, they'll make that money up. But if you're having a forced liquidation and a fire sale, you're going under. In my opinion, you're going under. So what does this mean? So let's say if they do go under, what's the big deal? How does this start? How does this start the domino effect? Oh, well, they're also a constructor of real estate, right? So contractors and plumbers and wall workers and electricians and all these people that have to contribute would get laid off too. And the Chinese government relies on, people going to work and being able to see a better future. When the first time ever they're going to have this major setback. And if this dominoes into all the other things, concrete companies, gravel companies, and it slows them down, they have to lay people off. You see how the dominoes start spinning, right? That's not a good look. And when China stops spending, or more importantly, China stops making as much, and they're like, well, if we're going to keep these people, we got to charge more. That means the supplies here are going to cost more for us to be able to get, right? And like I said, if your bank, like let's say Wells Fargo, had exposure to Evergrande bonds, like they had 20 billion of the 300 or whatever, right? They got to write it off. Well, now for their compliance records and stuff, they're not going to be able to just say willy-nilly, let's continue to lend. They're going to say, shit, we took a big hit. Let's contract a little bit. Let's rebalance our balance sheet. Let's see where we're at, see how much we can lend, see what we could do. And as you can see, that would cause a slowdown. Once that happens, now multiply that across all the sectors. Then all of a sudden, me going to the bank, wanting to open that shoe store from the beginning of the story, remember, tied it all in. Like, yeah, you have a good idea here, but, let's just hold off real quick. We're trying to figure some shit out. Now, I don't build it. People here domestically don't help me construct it. Then I can't get shoes into the shoe store. I don't hire employees. A whole economic cycle starts to slow down until everything gets settled out and, things get balanced out and we start lending again. And then the cycle will start back up. So that's how I think the domino will happen. Now, there's also, in China's term, there's a lot of people that paid in cash. They paid the house in cash. And they're like, what the hell, man? Were we going to get our money? What are we going to do, And, to me, going back to the original problem, it was, because of this, can China build them out? And how long can they wait for it? the yuan swaps have soared. So people have been on the Forex market saying, we have this much money in yuan, because they think that it's going to be a liquidity crisis. Like the government's not going to be able to come up with enough yuan to be able to fund the things. They're saying, hey, I have this yuan and I want to be able to put a contract that says any date and time I could swap it for dollars. And that price has soared. So the market's telling you, at least in the short term, that not necessarily that it's going to happen and China's not going to be able to fund them, but they're saying that people are scared that they're not going to be able to fund them. That should be somewhat worrisome, a little bit. And now if China steps in and they provide liquidity to the market, they're able to bail out Evergrande and set up favorable terms, then things will be able to smooth over. Then all of this, when the market does trickle down a little bit more, it just becomes another buying opportunity. Now the problem is can they do this? And before I get into my opinion on it, there's also the money multiplier, right? The velocity of money is not being here. So what the hell is all that? All that means is when we're lending money out, when I borrowed money to open my shoe store, I hired a contractor. The contractor goes and does my work, but then the contractor pays his employees. They go and they spend money somewhere else. They go give it to a gas station, to Walmart, to the local grocery store, and because they got a salary now, and then giving it to those businesses, they're able to pay their salaries. Their employees go spend it on rent, go spend it on. As you can see, that money multiplies. The money starts getting traded all around. When this credit cycle contracts, that money multiplier goes down, and that's a problem. And that's a problem we're seeing. It's a different correlation than just this Evergrande. It's the fact that the Fed's buying bonds, but is that money from the Fed just being trapped in the financial system and not making it out to me and you? Now, we've had government aid make it out to me and you, but no one's given me a loan at 0%. You know what I mean? And that's another cause of alarm when we're talking about inflation, in the sense of, is it going to be really that bad? And can that money leave the banking system and hit us, right? So back to Evergrande, just went off on a little tangent there. Now you know the highlights, right? 2% of the real estate market. They're $100 billion in debt. They can't sell assets really quickly. It could be tied to a lot of investors foreignly that could cause a little bit of a slowdown or a panic. And will China step in to save the day? And this is where I'll end it, where, in my opinion, I don't have much time here, 15-minute videos, to upload. I think the Chinese party doesn't give a shit. They don't give a shit. And I'll tell you why. Because if they gave a damn about money, they wouldn't put the restrictions that they put on Alibaba and Tencent and say, oh, kids could only play video games for 5 hours during the week and, whatever on the weekend. They would say, fuck it, let it ride. They wouldn't put pressure on Didi. They would say, double down, get the monopoly, put the money back into the state. They broke it up. They've lost like trillions of dollars in market cap there. I think this is an example for China to say, see, greedy capitalism doesn't work. You gave your hard-earned money to Evergrande. You gave $100,000 of your money or whatever it is, cash up front to build a house, and they couldn't even do it. That's where you got to believe in us, the Communist Party. Because communists would never do that. Capitalism is bad. Capitalism would do that. And look at all the destruction they're causing in our beautiful country. Everything was good until we allowed capitalism to come in. And to me, that's the scary part, because they rather let their people suffer economically, and with that, not just the money, but the heartache and the slowdown and the food shortage, everything else that would come with it, just to say capitalism sucks, communism's good. You got to pick up a gun and fight for China. You got to pick up a gun and fight for communism, because look at what capitalism did to you. That's the crazy theory that I have. Or maybe we're all just, jerking off to fear porn here. And in a couple of months, China just says, go ahead, we'll print the money, or we'll go to the IMF, the International Monetary Fund, we'll get the cash, we'll make this thing smooth out, and stonks just continue to go up. Now, the question to you is, what do you believe? And how are you going to play it? I did buy puts on SPY because I believe the latter. I think they're going to let it fall. And if you don't think they're going to let it fall, then just keep riding it out. Maybe sell some calls. No need to buy puts, and you're good. Hey, if you liked the video, please share it. And, I hope you learned something from this or took something away.